Gold has the broadest base of buyer, and so does physical silver, and physical, not the garbage contracts, right? But the physical, again, it's used in every single sector of the global economy, which means that out of all assets, both gold and silver have the broadest base of demand, and therefore they never go to zero. And they've not been able to figure out how to duplicate some of the qualities in gold and silver in a lab. So if they need those qualities, like in electronics and space travel, in the financial system, etc., they can only get that through owning physical gold and silver. The other thing is, once you own it and it's in your possession, essentially it's invisible. You keep anything, and now they're trying to change that, but at this point, that's still true. If you're sitting in any fiat money products, you have a bank account, you have a stock brokerage account, you have an insurance company account, that's all easily visible and therefore easy to take away. This is a collectible coin. The date happens to be 1914. This is not allowed inside of an IRA. So I am very happy to own it because I want to be in this classification, since historically this has not been confiscated. And let's face it, desperate governments do desperate things. And in the US, gold has been confiscated 3 times historically. We only know about 33. So physical gold, physical silver means that you have real money as they're destroying the rest of whatever little bit of purchasing power is left in this and transitioning us into the new system, CBDCs, which is the next, what they like to call innovation in money. Because with this, the public had control. If you did not like what the government was doing, you could go in to any bank with a $20 bill and walk out with an ounce of gold. And that would create restrictions around what the government could do. That's why they had to get rid of the gold in the system. Inflation is actually baked into the system because they knew that not one man in a million understands inflation. Little worrying when both Jay Powell and Christine Lagarde came out and said that they didn't understand inflation either. Not surprised, but a little worrying since they're the ones that are guiding this journey. But when you're looking at how gold and silver can protect you, this is that warm body of water that the frog has been sitting in, right? If you don't jump out of that pot now and position into your gold and silver, you will not be able to maintain your purchasing power. You will not be able to maintain your lifestyle, because when it happens very rapidly. So gold and silver outside of the system, the only asset that runs no counterparty risk, all the other assets are contracts. They go away. They don't protect your ability to sustain a reasonable standard of living. But you have your wealth in gold and silver, you can always, 100% of the time, because of that broad-based demand, you can always convert that into any tool of barter anywhere in the world. It's universal. Nothing else can say that. Gold and silver. When I travel with gold and silver in case. So global central banks have been accumulating gold at the fastest pace ever so that they can retain their choices, retain their freedoms, and retain the control, which is exactly the same reason that individuals should be buying gold and silver for barterability. What people are losing sight of is the difference between the paper market, which is all those contracts we've been talking about, which is exactly what that comment is referring to, and the physical markets, where we're seeing premiums way higher than the spot price. But in either case, and I think this is critically important, and it does take a level of nuance in it, but I think it's critically important for people to understand what the true fundamental value of any asset or any instrument is. Both gold and silver are severely, severely, severely undervalued. And the last time I did the calculation, and it's been a while, and other people may do calculations different than I do, but gold was north of 15,000 an ounce. So with spot at 2,000, 5,000, 10,000, it's a bargain. And silver is the secondary monetary metal. It straddles both worlds in that it is monetary, but it's also industrial. It also gets used up in production. Thinking that these people are gods is a mistake. They are human beings and they are fallible. When will this come to a crashing halt? Well, did we not see, 2020, where SLV, so the silver ETF, changed their prospectus because they couldn't put together enough baskets of physical silver to support their share prices. So they just said, which is true, it's very true, that those instruments are merely designed to reflect the spot price, which is a manipulated price. When you are going to see this, both gold and silver move toward their fundamental value will be when all confidence in the system is lost, and we're very, very close to that. And the government needs to regain, and central bankers need to regain your confidence. Because then what you see is that overnight revaluation, and globally on average, they do it 3 times. I can't tell you how many times they're going to do it this time. Maybe it's going to be 2, maybe it's going to be 4. I can't tell you till the transition is completed. But that's when you'll see gold start to move toward its fundamental value, as well as silver. So you're right. As long as Wall Street is under control, and when somebody knows they're losing control, if you think about somebody that's drowning and you go out to save them, what do? They hang on even tighter, right? And they jeopardize both of you. So when you see those bullion entities, those banks, taking more control over the price, that the visible price that we see, it's because they know well that they are losing control. Demand is far exceeding supply in both silver and gold.